Ladies and gentlemen, please welcome to the stage Mr. Demetri Sevastopulo, the Washington Bureau Chief for the Financial Times, to moderate a discussion with the Honorable Wilbur Ross, Secretary of Commerce for the United States, and the Right Honorable Dr. Liam Fox, the Secretary of State for International Trade and the President of the Board of Trade for the United Kingdom.
Are we good to go? Hello, everybody. Looks like it's lunchtime. Are we good to go or not? If I could have everyone's attention, please. I'd like to introduce Liam Fox and Wilbur Ross, who I think you all know, and we only have about 20 minutes, so I think we're going to jump in very quickly and start with questions. To both of you, the UK is the biggest source of investment in the UK, of FDI, and likewise the US is the leading investor in the UK. Can you tell me, what does this tell you about the bilateral relationship, the economic relationship between the US and the UK, first of all, and where do you think there are areas to increase those numbers? And what are the hurdles to doing so at the moment? And Secretary Ross, maybe you could start, please.
Sure. Well, I think the bilateral relationship, it goes way beyond even the economic, in that it is also a national defense relationship, it's a cultural relationship, it's a commonality of many sets of interest relationships. So it's a very pervasive feeling between the two countries. So I think it's only natural that there would be an extreme amount of FDI going back and forth in each direction. I think it's almost inevitable. Also, we're relatively similar economies in very many regards. There aren't wild imbalances in compensation or general structure of the industry. We both believe very much in rule of law as opposed to the law of the ruler. And so that makes us different from a number of our other trading partners. So I think there are many, many umbilical cords between the two.
And are there any particular areas that you think there are ripe for more UK investment?
Oh, I think everywhere. We're both technology-oriented countries. We need each other, and we do a lot of technological interchange back and forth. And I think that's a very healthy system. I think we have to figure out, in our side, some of the regulatory burdens we put on tech companies. UK is a little more civilized about, and we could learn a lesson or two from them in that regard.
The investment relationship is very interesting in terms of the balance that we have. We've got about $1 trillion worth of FDI between us invested in our respective countries. UK companies employ about 1 million Americans. American companies employ about 1 million Britons in the UK. And one of the remarkable things is not just on the investment side, but on the trade side. And at a time when the growth in global trade has been quite slow, last year we saw an 8% increase in the trade of goods and services between the US and the UK. So there are two economies which I think are increasingly in sync, which is obviously very good from the point of view of the UK as it leaves the European Union and being able to develop an even deeper trading relationship with the US. And our relationship, as Secretary Ross says, goes beyond just the economic, and a fair proportion of the work we do together is in the defense sector. And so our national security cooperation is a very, very important underpinning of the wider economic relationship.
If I can just pick up on the defense sector, Secretary Ross, the administration at the moment is trying to decide what it does in terms of imports of steel. The Europeans have expressed some concern. They say linking steel with national security could actually impact European allies of the US at a time when President Trump is trying to improve relations with NATO, which clearly suffered a little bit during the campaign. Can you explain to us a little bit how that decision is being made and whether you think the European concerns are overblown?
Well, first of all, the process will be Department of Commerce will render its report and its recommendations to the President in the very, very near future. He has announced publicly that he expects both the steel report and the aluminum report this month. So that will happen. Then the question will be, what does the President do with the recommendations that we make? Because Commerce, unlike a trade case, Commerce just has the power to recommend. It does not have decision-making power. Now, the President being the President, I don't think he'll dilly-dally very long on making his decision, whatever it turns out to be. So I would guess this would all pretty much come to a head in both aluminum and steel during the month of June.
But just on the European concerns, do you think that they're overblown?
Well, there have been a number of European companies against whom we've had to have trade cases. So the problem of overcapacity is not unique to one segment of the world. It happens to be very concentrated in China, but it's everywhere. We have right now orders in effect on steel. We have 161 orders about various anti-dumping and countervailing duties, and those encompass 37 different countries. So it is a fairly broad-spread problem, and that's one of the complications in trying to figure out how to deal with it. My own take of it is that what's probably happening is one country dumps, let's say, hot-rolled coil on another country. That displaces a ton of production of hot-rolled coil. That country then takes the cheap steel from the first country, fabricates it into oil-field tubular goods, ships it here. That now dislocates another ton. So there's a real domino effect or a multiplier effect that 1 ton originally entered into the market on badly concessionary terms probably creates 3 or 4 times as much dislocation. Mm-hmm. And that's a fundamental issue that both Europe and we have to relate to. Now, U.S. has not been adding capacity. Our capacity has been flat for a very, very long time, and if you look back further, it's actually down from where it had been at one point earlier. So we're not the ones creating the excess capacity. But since we are the world's largest importer of steel, we're the main, if you will, victim of the overcapacity. And so that's an issue we have to grapple with.
It's not a simple issue. We know there is global overproduction. Mm-hmm. We know there has been dumping. If we want to have a rules-based system for global trade, which we do, we have to make sure those rules are properly applied. And that means that we get proper transparency. And one of the problems, for example, in dealing with the Chinese steel industry is that a lot of the companies are state-owned, and it's very difficult for us to get a clear view of where subsidy actually comes in the system. So we need internationally to be able to deal with that. It has to be done in a way, of course, that doesn't push prices up and damage consumers of steel in other industries. And from the UK's perspective, we have a unique position with the United States in terms of steel, for example, and providing steel for some of our major military projects. And so we have a shared view on national security, which is perhaps unique in the defence space, although in the trade space, our arguments would be similar to those that we're discussing on the international stage, including our European Union partners. So, but we've had very sensible, open discussions on the issue, and we have both understood where the UK's national security concerns are on this issue.
So you're not overly concerned by some of the things that the administration might do either later this week or over the next couple of weeks?
We will wait to see what the report says. It's in our interest that global overcapacity is dealt with. But we want to see, as I said, that we both want to see the international rules operated, but we have unique US-UK security concerns, which we have raised, and I'm very grateful for the hearing that we've had on that.
Right. Secretary Ross, can I ask you, how does the push for more FDI in the US dovetail with President Trump's push to bring jobs back to particularly the Rust Belt areas? And one of the things you often hear from companies is that the US infrastructure around the country is clearly in pretty bad shape in many places, and that prevents some companies from making that last plunge in investing. Can you talk a little bit about that and whether you think infrastructure is really going to be dealt with in the short term?
Well, we have a discussion a little bit later today at 1:30. Richard Lafrac, a former business partner of mine and a very big real estate developer in the U.S., is going to be discussing a lot about infrastructure. But the reasons why foreign direct investment should come in, and we think will come in, are much the same reasons that we're trying to address in order to encourage U.S. companies to do more, namely reducing regulatory red tape, cutting the tax burden. We've been too highly taxed in terms especially of corporate tax relative to other countries, as well as unleashing our energy resources. Historically, one of the big drivers of our economy has been relatively cheap energy. With some of the regulatory enthusiasm of the last administration, we've lost some of that capability. Well, that's going to come back now. And then trade is, of course, another piece, and infrastructure is another piece. So we're conscious that we need all of those things. What's sad is that we've had all these budget deficits. We've doubled our national debt in 8 years, and barely a penny of that went into infrastructure. That's a sad commentary. And if some portion of the deficit had gone for infrastructure, we'd be in a lot better shape than we are now. So we're into a lot of remedial medicine rather than in precautionary care.
We did some TV this morning. We were being accused of speaking from exactly the same script. And the reasons why the US attracts UK FDI and vice versa are the same. We have a rule of law that attracts money into our countries because it gives security to investors, and that applies to investment coming into the UK, which is Europe's #1 destination for investment. We have a skilled workforce, but we can improve those skills. We've got a relatively low taxation and low regulation economy compared to others, but we can get them in lower in taxation and lower in regulation. We've got a very cutting-edge tech and research base, some of the world's best universities, and we speak English. Now, those are very substantial advantages. We do, however, share some of the same problems. We have a trade deficit that we need to improve, not least by improving our export markets and our export penetration. We need to improve our current account deficits by, if possible, increasing our overseas stock that earns money for us. And we have a deficit because we've had governments that have lived beyond our means for too long. And I think something that Secretary Ross and I certainly do share is that we believe that it's a moral imperative as well as an economic one that we don't spend the next generation's money now and simply land them with more debt in future. So we're very much in step in terms of our economic outlook, but the question of infrastructure tends to focus on hard infrastructure, on roads, on ports, on airports. The key element of that infrastructure is human infrastructure, and we're going to have to make a cultural shift to get people to understand lifelong learning, that education is not something that you go through once to get into a career path. It's something that will have to be done throughout life, and giving increased improvements in vocational training, apprenticeships in the case of the UK, will be essential parts of equipping our populations to deal with some of the challenges.
So are there any different or new opportunities in America under the Trump administration that weren't there before, or is it essentially the same field and a different president?
The US is already a great place to invest, as I would argue is the UK. We know the reasons why people want to come and invest in us. We can help accentuate those advantages that we already have by looking at the environment for investment and to see where money can be made, money can be moved, and money can be kept, which are the three prerequisites for investment.
And has there been any new trend under the Trump administration?
Well, the government is very clearly committed to a lower regulatory environment and a lower taxation environment. And these are... money has absolutely no emotion. Money has no sentiment. Money will go to where it can be best serviced. And that's something that the government clearly understands.
Secretary Ross, just to pick up on tax reform, obviously it's one of the big 3 or 4 things that President Trump wants to push ahead with. It's been a little bit difficult on Capitol Hill in the first 5 months. You yourself have seen that in terms of nominations, legislation, etc. How optimistic are you that the administration can push through comprehensive tax reform and not just tax cuts before next year?
I think there's a very good chance we're heartened by the fact that the health care reform seems to be moving along. It got through the House. Now it's being pushed together very quickly in the Senate. And we need that because in the U.S. we have this scoring system with the Congressional Budget Office, which is a nonpartisan entity, and it scores things on a 10-year time period. Well, in order to reconcile competing tax bills between the House and the Senate, we need a process called reconciliation. And the predicate for that is that it meets certain tests of the CBO over a 10-year period. So the reason we went for health care very first is, first of all, it was a big campaign promise, but also we need the savings to help make affordable the tax reductions that we've just been talking about. In the normal course, if it weren't for that, you would never take on health care first because it's inherently a much more controversial issue than tax reform and tax cut.
Mr. Fox, let me ask you about Brexit. What impact is Brexit going to have on either UK investment in the US and US investment in the UK?
I don't think it will have much impact on investment. As I said, there are a number of other factors that will determine the level of attractiveness of any market for investment. What will happen is that after we leave the European Union, of course, we will be free to enter into a free trade agreement with the United States, hopefully to help open up our economies further. And it's what I meant by the opportunities we have of economies that are very much in sync, as Secretary Ross says, relatively similar shapes of economies, which should open up real opportunities. And one of the reasons that I'm here on this visit is to look at the continuity agreements. The United States has a number of agreements with the European Union on economics, on security, and on trade that the UK is party to at the moment. And we will want to ensure that we continue those as we leave the European, so there's no disruption to markets or to traders. That's very important that we do so. Then beyond that, we can look at new opportunities. And again, we're looking at the sort of areas, exploring the areas where we might have some room for improvement. The more we're able to liberalize our economies, the more attractive we become for investment, the bigger the trade is likely to be between us. And ultimately, and the most important thing, the greater the prosperity we can offer our people, because ultimately we all want to spend money on healthcare and infrastructure and education, but you have to generate the wealth first. And the essential truth is that governments need to focus more on generating wealth, and that means taking someone's IP and turning it into a good or a service that doesn't exist today. And instead of governments worrying about distributing wealth, creating wealth, and creating the conditions by which, as the Secretary said earlier, the private sector can generate that wealth, is ultimately what we want to achieve in any of the discussions we have between us.
Secretary Ross, how do you view the impact of Brexit on investment across the Atlantic?
Well, the pound has weakened relative to the dollar, so if anything, that makes it for the moment more attractive investment circumstance. I don't think the fact of UK departing from the EU will have any impact on the fundamental relationships between the two nations. There's no logical reason why it should have to. And in some ways, particularly in the financial sector, might draw us even more close to each other as two of the major capital markets in the world now being perhaps a little closer to each other, with a little bit more removed in the case of UK from the EU.
I think will also help us to, when the United Kingdom takes its seat on the WTO independently, it will help us to look at the sort of reform of the global trading system that we want to see. How can we get better liberalisation? How can we get quicker reaction to some of the changes in the global economy? The point was made earlier about the NAFTA agreement being written long before we even talked about the digital economy. So how do we find ways that are faster than the traditional FTA way of dealing with challenges and innovations in the global economy? We, for example, share very many of the US's views on data movement. You can't have a global economy where you can move goods and services but not data. And some of the views about data localization that we get at the present time really are holding back the global economy. So I think there are huge areas of overlap where we can work together. And I, for one, am looking forward to, once we've left the European Union, being able to maximize to an even greater extent the relationship we already have.
All right, thank you very much. Sadly, we are out of time. I've got about 10 more questions I'd like to ask you, including when you're going to start the US-UK free trade deal negotiations. But
from the US side, we've made clear we're prepared to begin as soon as UK is ready.
We're not allowed to conclude any negotiations as long as we're still part of the European Union, but we are, of course, allowed to scope out the future relationship that we will require as we do leave. That, of course, will be in March 2019. There's no doubt about that. We began our discussions today with the European Union, and we have trade working groups already set up to do the preliminary scoping out of that work, and the first meeting will, in fact, be in July this year.
Well, as the details of the scoping out become clearer, I hope you'll come to the Financial Times and let us know what they are. Thank you very much. Thank you to the audience for listening, and thank you to Secretary Ross and to Ms. Secretary Fox. Thank you.